Meantime, as we saw yesterday, stablecoins are turning out to look not so stable anymore, at least some of them. Joining us right now is Circle CEO Jeremy Allaire. Jeremy, it's great to see you this morning.
Thank you.
You're in the middle of all of this. Explain what's happening, because the truth is that a stablecoin was supposed to be stable. It was supposed to be a buck was worth a buck, and now, at least in these two cases, that's not the case.
Yeah, well, so specifically with Terra, really what you saw was a system that was designed, a system that tried to incentivize people to create what's called an algorithmic stablecoin to be able to mint one of these. But the incentive was really a subsidy on a yield. So get 20% yield, seems risk-free. People were buying this token Luna in order to create these stablecoins that could then pay them 20% interest. But when you looked beneath the surface, and I think any reasonable person who looked beneath the surface saw that this was a bit of a house of cards. And so those subsidized yields were going to run out. I think as soon as you saw some contraction in the market, all the underlying assets that supported this, we started to see those flow out and see price pressure. And in a system like this, it's very vulnerable to the classic death spiral. And that is very much what we saw happen. Now, that's in contrast, obviously, to a regulated, fully reserved dollar digital currency or stablecoin like USDC, which is always held with cash and 3-month U.S. government treasury bonds. And that's why it's really, I think, considered kind of the gold standard in this space of stablecoins.
So the question, therefore, is, do we need more regulation? And because I think you go online and you look at some of these people who were buying this, and in some cases minting this, who I don't think understood the risks that were involved. And half the time you talk to some of the leaders of these projects, and you couldn't even get a straight answer, frankly, about what was actually backing these coins.
Yeah, and even more amazing is that I think a lot of highly intelligent people who are very deep in this market, I think believed a lot of the hype. And so I think there's a lot of self-reflection that needs to go on for quite a few people in the space. Specific to the question of regulation, we have always felt that there needs to be a regulatory framework around stablecoins. That's why when we launched USDC 4 years ago, we launched it under a regulatory framework, both federal and state, that ensured that consumer protection was in place, that there was always 100% reserve. That's the money transmission statutes of the U.S. Our view is that there needs to be more. And so, last year, as we know, the White House, the Treasury Department issued a report saying it was urgent that Congress act on this and establish a national licensing and supervisory framework for dollar stablecoins in the United States, both because there are these known risks. Those risks get larger and larger as these get larger and larger, as everyone has seen, but also because this is a really critical infrastructure that is going to be at the center of how the dollar works on the internet. And so you want to have that be something that businesses and households can understand, can trust, can interact with, and work.